Hello and welcome to our special coverage here from Davos 2026. I'm Shereen Bhan. We've been bringing you global newsmakers, headliners, business leaders to talk us through what 2026 looks like, what will be the trends that will shape the global economy, what will shape India's growth as well. Joining us now is someone who has a pulse check on global growth as well as a very keen eye on India. Michael Miebach, the global CEO of Mastercard, here with us in our Davos studios. Michael, always a pleasure. Thanks so much for joining us here in Davos.
Good morning, Shereen. Thank you for having me on a very chilly morning.
On a very chilly morning indeed. But what about the investment climate and the investment temperature? Michael, is it as chilly or is it heating up?
Hey, you know, the investment climate is a lot less chilly. So we see a lot of investments across the digital economy from leveraging AI for better experiences, powering the digital economy. We see a lot of investment around cybersecurity in the space. So I think AI lowering the barriers to bring better experiences to people is just taking hold, and we're at the beginning of a whole new dawn around the digital economy. So exciting, very exciting.
I'll talk about the excitement on the digital economy in just a second, but let's talk about the real economy. And let me start by asking you about the trends that you're seeing in the US specifically. You know, the tariffs have had an impact. Of course, not as severe as was expected, but what is the retail consumer telling you? What is the data telling you at this point in time?
You know, when you take a look back at 2025, you know, we're in a unique position as Mastercard. There's a lot of data, so we have a good pulse on the overall economy and particularly on the consumer. So you think with tariffs and people adjusting and companies adjusting, the overall economy adjusting, we should have felt more of an impact. But it was a pretty strong year, 3.2% on the GDP side overall for the globe, and the US fared very well in that. And you ask the question, yeah, why is that? So why is it adjusting? So first of all, we have seen a lot of the learnings from COVID. Supply chains are a lot more resilient, and there was a lot more focus on localizing supply chains, and that has helped in this instance. The private sector is very good adjusting when they know what's happening. So in the initial, first half of the year, that wasn't so clear, but it was pretty clear that what the private sector had to do in the second half of the year. And the consumer adjusted as well. So if you're uncertain as the consumer, but you happen to be, in the digital economy, you have a lot of tools that allow you to find out what's the best deal for me. If I don't quite know where prices are going, but I'm going to shop around. I can see what is my loyalty program offering me, where do I get the best deal. I might have my preferences out there, I get better advertising. All these things come together, the consumer adjusted. Consumers were also shopping early in the holiday season this year. They said, okay, I need more time to find out what I'm going to spend money. So they were very prudent, very savvy, and very intentional. And we don't see that changing in 2026. So the outlook is very positive, considerably positive, let's put it that way. So we feel it's going to be a year of continued expansion. You also saw that generally there was trade alignment happening. You saw, when I think about where global trade flows go between Asia and the US, there was a little less in the second half of the year, particularly with China, so that just kind of balanced out in a way, but it all has settled. And some of the more secular trends is continuous investment in AI and in technology that is propping up the overall economy. And you do see this continues strong household balance sheet. So all that together is a pretty positive outlook for this year.
So the outlook continues to be positive. But you talked about cross-border volumes, and that is a high-margin business for you. On account of this geo-economic confrontation and geopolitical risks and uncertainty, how much of a concern do you have on that side of the business?
So when we look at cross-border spending that's going on, you see cross-border spending in terms of travel. 2025 was a strong year on travel, and we don't see that changing. Just look at how full it is here in Davos. So people continue to travel despite headlines, and that's a fact. When you think about non-travel related cross-border spend, after COVID, non-travel related e-commerce really picked up, and those preferences have never changed. So this is a very strong business for us and for other players in the ecosystem. So people look around the world and see in the digital economy, the world is my oyster, I want to buy this, and it just happens to be available elsewhere, and consumers do that today. So we don't see that changing.
You don't see that changing either. Let's talk a little bit about what's happening in terms of payment trends, stablecoins, and that's something that Mastercard has also moved to and integrated into your system. What should we expect? What will be the trends that will shape 2026?
Yeah. If you look at the headlines from a trend perspective, so stablecoins, digital assets is certainly one of them. The whole space of agentic commerce is another one. And then more fundamentally, cutting across both of them is generally the need to secure the digital economy. So those are three big trends that are at play. Just spend a little bit of time on each of them. Stablecoins, very interesting from our perspective. So here's a technology that facilitates quick and easy payments, programmable payments between businesses and between people. So as a payment powerhouse, the operating system of the digital economy, as I like to describe ourselves, of course we have to offer that. It's built in our network. Our network is ready to settle in stable coins everywhere around the world. And we see demand rising. Think about it in the context, for example, of cross-border payments. So those are today oftentimes payments that have to be pre-funded. With stablecoins, it's instant settlement. You don't have to do that any longer. From a capital perspective, it's a lot more efficient. For consumers or businesses, it's most likely going to be a little bit cheaper because the money arrives faster. So a lot of advantages there in that use case and many other use cases out there. We're excited about digital assets from that perspective. Agentic. So the world of agentic AI in the world of payments manifests itself, for example, from a user experience. If you decide you're going to go on your favorite chatbot and you ask your chatbot, I have to do this trip and I'm needing the following things, and it gives you a list of 10 items that you need for this, let's call it camping trip. In today's world, you might go on your favorite search engine and then hit different websites to buy what has been recommended to you. In the world of agentic commerce, you could just check out on your chatbot. And how do you do that in the world of payments? The chatbot needs to be registered. Is it a real chatbot? Is it verified? What happens if something goes wrong? So all the things you take for granted when you pay with Mastercard today. So we have built that into the agentic commerce experience. And that is bound to take off because consumers like this kind of experience.
How large is it today for you, agentic commerce?
It's early days. It is early days. So it will be, I think, in the space of consumer payments, it will pick up first because consumers, particularly younger consumers, like to try these experiences out. It will be a good experience. But just think about the world of intercompany kind of trade flows, procurement, for example, when in a company something has to be bought from one of your vendors, and agents do this autonomously going forward. And the payment is enabled, so some sort of resource needs to be bought for the company. All of this starts to become highly automated, powered by an agentic commerce experience where the payment ecosystem and the corporate ecosystem just click into each other. Exciting times, again, early days. I think consumers are a little ahead, but this will follow, and I think we're going to see it grow very significantly.
So what kind of investments are we talking about? You have, of course, been investing in AI, also, cybersecurity, about $11 billion over the last few years has been spent on that. But
I think this was the number when we last spoke. It's much more now.
I would imagine so. So
exactly.
what can we expect in terms of future investments now?
Yeah, so for us, we invest in emerging technology. We have to because we provide those choices to our customers, and if agentic commerce is the latest thing, or stable coins, we have to have it. So we are investing. But across the board, the investment in cybersecurity is really needed, and that's a topic that's not talked about enough. So with this ever-growing digital economy and our more digital lives by the day, keeping that digital economy safe is important. It's important. Particularly when you look at that AI is not only serving good purposes, but also it's serving the fraudsters and the scammers and the hackers. So we have to arm up. It's a bit of an arms race out there, and the industry overall is doing a good job, and we're taking a leading position here in investing and ensure that the 160 billion transactions run through our network every year are actually safe.
Well, speaking of potential risks and challenges, President Trump has made an announcement as far as an interest cap is concerned on credit cards, and I know that you don't set the rates, banks do, but the unintended consequences of a move like this, which is intended to actually make things a lot more affordable for the consumer, but what are the unintended consequences of it?
Yeah, it's an important conversation around affordability for citizens in the United States and other countries around the world. So there was a call by the president for an interest rate cap. The industry, particularly banks, have engaged on that and highlighted the importance of the affordability conversation, but it's also highlighted one has to think through what are the consequences on the availability of credit. Now, we don't set rates, as you said, but we believe in the power of the private sector of finding the right balance to ensure that credit is available where it is really needed. Imagine you need a bridge from your paycheck to the washing machine and it is broken down. How do you do that? So if you don't have credit available at short notice, then that might be problematic. So those are all things to thought through. I think this is early days in that conversation. But it's an active conversation, and we'll see where it goes. I
want to talk about India. And Michael, you are a regular visitor to India. And of course, Mastercard has significant operations in India. And I know that you see India as an innovation hub for Mastercard, not just for India, but to innovate for the world. What's the latest on India?
Yeah, so there's always the latest for India. Earlier we were talking about payment trends. And if you think about how these payment trends play out in India, so yes, by many standards, the largest digital economy in the world. We talked about this many times before, with the India tech stack pulling more people in. So if you think about the cybersecurity trend, for example, that is really needed. So is the Indian economy, India as a country, focused on cybersecurity? Absolutely. So big praise there, in fact. So we have an MOU with CERT-In, your national cybersecurity agency, to ensure that across the board the ecosystem is secured. So, innovations like biometric passkeys, where you look at any kind of your device and use a biometric identity that's linked to your identity database that you have built in the country, is just a major, kind of leg up versus many other countries on that. So we're excited about that. We talked about agentic commerce, so there's already conversations on where that could go.
Presented by